Hi friends, this video contains about the financial system and economic development or relationship between financial system and economic growth or role of financial system. This topic contains the three questions: relationship between the financial system or and economic growth or role of financial system or financial system and economic development. Financial institutions and markets are the together called the financial system. This financial system is the backbone of the national economy. This is because the efficiency with which the financial system works plays a very important role in the economic development of the nation. When we do start paying attention to the financial system, it is easy to see why it plays a funda- foundational role in the economic development of the country. It means every organization or every financial institutions helps to the economic development or it plays the major role in the economic development or economic growth or it plays the important features relating to the economic development. Some of the points explain how it relates to the economic growth or how it plays the important role in the economy etc. This lists down certain examples that explain how financial system play an important role in the economic development of the nation. Interest rate stabilization. The system ensures that all the organization and institutions which which it is composed of behave as a one unified system. Generally, healthy competition is promoted between the members of the system. This means that members have to compete with each other by lowering their cost. As a result, the benefits of lower interest rates are passed on the consumers. It is existence of the financial system which ensure that interest rates remain stable across the country. The banking system led by a central bank makes this possible. In the absence of the financial system, each region would have its own interest rate based on the availability of capital. However, with the financial system in place, interest rates remain the same across the entire country. As a result, businessmen and entrepreneurs throughout the country are equal to floating. Interest rate stabilization means if in the economy financial system is there at that time all the financial institutions or commercial banks or financial organizations charge the stable or similar interest rate to the lending or borrowing funds. If in absence of the financial system, every organization or different organization charge the different interest rates because their capital, if the one organization having more capital or more resources at that time they go for the lower interest rate, but if the one organization having the less capital or less resources at that time they have to charge the higher because of there is a availability of fund with themselves. Next point is its trade and commerce. Credit risk always been the main factor that inhibits trade and commerce. If a seller is not sure about whether they will get paid for goods with the sold, then the will not sell more goods till the earlier payment has been received. This reduces inventories turn around the and leads to a decline in the trade and commerce. Financial system ensure quick and timely payment with the advent of advanced technology. It is possible of remit money to any part of the world within a few seconds. Hence, financial markets and institutions aid in trade and commerce and even improve the gross domestic product of a country. Next point is aids trade of commerce. It means every commerce activities needs the financial resources. If the financial system existed in the economy or existed in the one nation, at that time it is easy to provide the financial assistance to the needy person and collects the amount from who having the surplus amounts. Next one is aids international trades. The risk inherent in trade and commerce get multiplied service several times when it comes to international trade. This is because, firstly, the seller and buyer are in different legal jurisdictions. Financial system plays a very important role in the international trade process. This is because importers and exporters generally use banks as an intermediary in the process. The importer deposits money with the bank in form of letter of credit. This letter of credit is the paid to the exporter by the bank when goods are received. As a result, neither party has to rely on each other. Instead, both of them can rely on the bank, which has the higher credit rating and therefore aids in the reduction of risk. Similarly, countries have created special boards for export credit and promotion. Next point is aids international trades. Aids international trade means financial system helps to the international trade. In case of exporter of one country exports the goods to the another country importers, at that time importer required or need to pay the exporter. At that time currency is difference from one country to another countries. At that time financial system exists in both the nation. If both the nations at that time they have to easily exchange the currencies. For example, Indian exporter exports the goods to the America and American importer importing that goods. At that time American importer pays the dollar to the Indian exporter, but in Indian market a dollar is not traded. At that time conversion of dollar into rupees is needed. At that time financial system of the both the nations at that time financial system of the both the nation is required to exchange the currencies. American financial system collects the dollar and exchange or converting into the rupees, and it is transferred to the central bank of the nations. In that one point is there letter of credit. It is just like a bill discounting. When the importer importing the goods from the exporter, at that time he will pay the amount to the exporter. For this reason, exporter drop the bill and send it to the bank of the importer. After receiving the importer, they have to pay for it. It is called as letter of credit. Next point is aids in attracting capital. Stable financial markets raises investor confidence. As a result, investors from domestic as well as international markets starts investing in the capital market. As a result, more capital become available to the domestic companies. They can then use this capital to increase economies of scale, which makes them more competitive in the international market. If these financial institutions and markets were not present, foreign investors would find it very difficult to locate investment opportunities and flow through with them. It's attracting capital. It's in attracting capital. Attracting capital means the financial institution attracting the investors to invest in different financial instruments. For this reason, they have to attracting the customer who have the surplus amount, and this amount is mobilization to the person who invested in productive avenues. Next one is infrastructure development. Financial market plays a vital role in infrastructure development as well. This is because the sector may face great difficulties in increasing large amount of funds for project with a high gestation period. It is the financial market that provides the liquidity required by investors. Investors can sell their securities and cash out whenever they want. Financial market also allow government to raise large sum of money. This enables them to contribute deficit spending. In the absence of financial market, governments would not be able to continue deficit spending, which is important to fund infrastructure project in the short run. Infrastructure development. Financial system assisting to the infrastructural activities like roads, buildings. These are In financial systems, they have to providing the financial assistance to the infrastructural or builders when they needs the amount to investment in the public welfare developments. At that time, government also requires the amount. Financial markets provide the financial assistance to the government for the projects, PWD projects. Next concept is help in employment creation. The financial system provides a capital to the entrepreneur who want to start a business. When these business come into existence, they directly and indirectly require the several services of a wide variety of personnel. As a result, a lot of employment is generated in the economy. The financial service sector provides a lot of employment. Many of these jobs are high-paying white-collar positions that are capable of bring the employment person into the middle class. Financial institutions or financial system helps to create the employment. When surplus amount is mobilization to the productive avenues, at that time human resources is required to working at the organization. It means any businessman start the business, he requires the many personnel to operate or for it requires the operational activities. At that time, it creates the final job opportunities to the needy persons. Then conclusion, to sum up it, financial system are like the foundation of building. This is because the financial system is fundamental and the economic cannot stand without it. However, until everything is working fine, no one noticed the financial system just like the foundation. It clearly says that every economic activity requires the financial assistance. Without financial, there is no economic activities is carried out.